And the goal of this training is to show you where I shop, why I shop there. I'll give you a couple examples, okay? And again, we're not to be redundant, but to illustrate the point, we have access to every carrier just about out there for health insurance purposes, right? But we don't go to places that and waste our time shopping there if the coverage is more expensive and not as good. We sell the best plans, and they're always in the same 3 to 4 different places, okay? So I'm going to share my screen and kind of show you how I set up. You know, I have multiple monitors, but this one monitor is always dedicated to sales, right? If I talk to a prospect, if I get someone to call me on the fly with a referral and I want to jump right into it, then if I have time and they're ready to talk, I could jump right into my sales process, okay? So the first thing I always keep up, and you should be able to see my screen now, but I always have my website page up to show them brand. So whenever I'm connecting with a client, whether it's a Zoom call or a screen share, the first thing they always see is brand. So whether it's your own personal website that you have, or if you just want to use the USABG website, totally fine. You know, I'll have mine up, or again, when I first started and I didn't have a website, it was the main USA Benefits Group landing page, usabg.com, okay? On another tab, I'm going to keep all the main carriers that I offer, that the best plans, the best products. So I have Philadelphia American. I'll log in. Manhattan Life, logging in, and America's Choice. And that's the main product page, okay? And then I'm also, lastly, I'm going to have Health Sherpa up. And this is Health Sherpa. For those of you who don't know, Health Sherpa is one-stop shop for everything marketplace, Obamacare, okay? So I'm actually going to start here with Obamacare, okay? And, you know, for new agents again, or if I'm explaining it to a prospect, if someone has Blue Cross Blue Shield, Cigna, Aetna, United Healthcare, any of the big name carriers, and it's not offered through an employer, the odds are it's marketplace, okay? Any major medical, any big name plan, again, is typically going to be marketplace. So we'll go ahead, and I'm going to, actually, hold on one sec. So here is a recent sale. I'm going to use my zip code for now, though. All right, it was a couple, and this was a referral, okay? They called me up. It was a referral from a current client I have, and they're like, hey, I just retired. Me and my husband were on my group plan for years. I just retired, so I need to find affordable health insurance. I've been on Marketplace, and it's crap coverage. They didn't like it, okay? So I happen to have time with them right there on the spot. So I said, hey, if you got a couple minutes, we could jump into this now. And I had everything pulled up, okay? So again, it was a couple just retired, and they were making, retirement income was $55,000, okay? So I plugged that in. And again, these are Obamacare, Marketplace, ACA, which stands for the Affordable Care Act, all the same stuff, all the same name for these plans. So what you can see is they're going to get a subsidy for $2,000, which is good, right? Based on this income. And yeah, there's free plans here with no deductible. However, just because it's free and there's no deductible, it doesn't mean it's good insurance. And what I mean by that, let's look at it. So yeah, no cost is good. No deductible is good. However, you still have a $9,200 per person max out of pocket. So what that means is, yeah, you could see a doctor with a copay. You could get preventative care for free. You could even get generic prescriptions with the copay. And you have some copays here. But bottom line is you're paying $150, $300 for any type of outpatient care. Hospitalization, you're paying $2,000, $2,000 for ambulance, and you're paying this per day, right? And essentially, if one time on Marketplace, on most Marketplace plans, if you're admitted to the hospital, you're going to be paying for sure $9,200 per person, because you're going to be there for a couple days, you're paying a copay per day, or you're just paying the full amount, Okay. So when these clients, they had group coverage, they're used to having like low out-of-pocket costs with their insurance, right? They saw these plans and were like, this is crap. If something happens to us, and they went to the ER earlier in the year, and they had like a low copay on their plan. They're like, if I go to the ER again, I'm going to be paying $9,000 out of pocket. I'm like, yeah, marketplace, you probably will. Okay. So what we'll do next is hop to, and this is my go-to, is Manhattan Life. Why I like Manhattan Life is because I can sell it as a standalone private insurance plan to a client, to a prospect. Say they make a lot of money and we can't do marketplace, it's just too expensive. Again, I could sell Manhattan and I'll package it a certain way to make sure it's a good single plan without marketplace, right? Just as a standalone product with Manhattan. Or what I could do, it's flexible. I could sell it as a gap plan to cover these giant deductibles and out-of-pocket maximums. So with this client that has zero payment, I tell them, hey, the good news is you have a free plan, major medical, catastrophic only. It's only going to cover basic doctor visits and then big claims. Everything else, you're gonna have a big out-of-pocket cost, exposure to a big out-of-pocket cost. But what's nice about these private gap plans, and I'll quote it, I'm just going to guesstimate their birth date here. Okay. Push up. And the main plan with Manhattan is affordable choice. Okay. So I told them, hey, you could do an elite plan for $567 a month, pair it with a free marketplace plan. And this here essentially is going to fill the gaps in and pay all or most of this max out of pocket, this deductible. All right. And because they're used to major medical, they get major medical protection. What I mean by major medical is just unlimited benefits on the back end. Pairing it with a gap plan, Manhattan Life Affordable Choice, and now you got the best of both worlds. You got unlimited marketplace, catastrophic, and you have a gap plan that's going to cover doctor visits, outpatient, hospitalization, surgical, outpatient surgeries, MRIs, CAT scans, you name it, right? And every dollar that this plan pays out direct to the hospital, direct to the doctor's office, direct to the MRI facility, wherever it is, every dollar that that plan pays out, it's going to act as if you paid this $9,200. And once this is satisfied, the $9,200, once this plan pays all that money out, and this is satisfied, this number, then everything else billed to this plan for the rest of that year is free, fully covered. So I was able to, on that referral call that I got a call into, I was able to explain that over a screen share. And I sold them right then and there. It took me about 30 minutes, not even. And I had a sale with Manhattan, and I'm enrolling them in an ACA plan. Okay. So that's one example of, say, a combination of Manhattan, which is my personal go-to, with Marketplace. That's one of the, so if I sell 3 plans on a regular basis, it's either going to be what I just showed you. Manhattan, number 2 would be Manhattan by itself with, what I mean by itself, no ACA, but I'll pair like Med Mutual or Catastrophic to make it a private plan to sell by itself. And then the third one, America's Choice. And if you want, some agents like to do Philadelphia American in place of Manhattan, and that's fine. I defer to your upline. I have my reasons, and everybody individually does. They're very similar, those 2 plans, right? But if I'm selling, if my last 30 sales came from one of those 3 areas, and you probably go back my last 100 sales, it was either this, this, or a combination of those three. And that's it. And once you could, takes a little time, right? But once you could articulate that and explain those couple of plans, not only do you know more than most casual health insurance shoppers out there, but honestly, you know more than most health insurance agents out there. Because most health insurance agents only have access to one of these three categories, or just a combination of not very good plans. And I know this is repetitive if you're on my last call Friday, but that's it. And that's where, once you manage that, the hardest part is just finding who's interested. And it's easy to sell.
Kush, could you show us what you would do? Let's say they're a wealthier client, maybe they make $150,000 to $200,000 a year post retirement.
Yep.
What would you do in that scenario?
Yep. Good. I was going to jump into that, but no. Good segue, Damien. Thank you. So let's just do, they're older. So let's do 250. So maybe, they're older. They have, they're retired. They sold their business. That happens a lot too. I just sold my business. My income this year is going to be like $500K. So let's just do 250 for now. These plans get a lot less good as this income number goes up. Let me do 200. So even at 200,000, you're looking at $955 a month, $6,000 deductible, $967, $7,500, so on and so forth. Big deductibles, big monthly price. Not only that, but these networks, these are tiny networks. Good luck finding a range of doctors. If you have 3 doctors, good luck finding a marketplace plan that accepts all 3 of those doctors. Probably not going to happen. Okay. So this scenario, if you're of higher income, that same couple, but has higher income, this is probably a no-go. Especially if they're healthy or fairly healthy. Okay. And that health hoop is pretty big you have to jump through. I get clients approved on private insurance all the time that are on anxiety meds, diabetes medication, high blood pressure, high cholesterol. That hoop of health is pretty liberal. So if marketplace is out of the question, then no problem. I'm going to shift back to my other tab. This is my private insurance tab. So I'll start with Manhattan. And again, depending on, what the budget is, I'm going to structure this a little different. But for now, let's say these plans are going to be $955 as the lowest, worst plan. Then maybe I'll do something like this. So it's affordable choice. Let me slow this down. Sorry, guys. So it's either Classic Plus or Elite are typically the 2 tiers I sell most of the time. Both are really good. If you're familiar with Philadelphia American, think of the Classic Plus as like your 2-unit. Think of the Elite as like a 3-unit plan. So let's just do middle, 2-unit or Classic Plus. I'm always going to put 24-hour accident. And I love the out-of-pocket protector. I sell this every time. And if you don't mind, here, I'll go on a quick little side note tangent here. Just had a client call in, went to the hospital, went to the ER. I had her on this. This is what she's on, this combination of plans. Okay. She went to the hospital, emergency room, was admitted for like 2 days. They did all types of blood work, blood tests, all that stuff. The hospital was in network. So most everything was covered with affordable choice. However, because all the blood work they did, it maxed out her blood work benefit pretty quick on affordable choice. So she got like a $4,000 bill in the mail. So she called us up this morning with this $4,000 bill, and she was confused. She was like, why do I got this $4,000 bill? And then I got another EOB, or explanation of benefits, from an out-of-pocket protection, which is this plan, saying that they covered it all. And I said, well, hey, that's why I package these plans the way I do, because when your affordable choice ran out of benefits, it bumped it. They denied the claim, but they bumped it to out-of-pocket, and that covered the rest of it. So without getting into the weeds too much, there's reasons why I package plans the way I do. So let's call this a basic baseline on Manhattan. And then I could pitch this product, but all I'm selling is affordable choice, right? I don't say, hey, What I'm going to put you on is affordable choice, 24-hour accident insurance, and an out-of-pocket protection plan. No, you're going to lose sales that way, right? Hey, what I sold you is affordable choice, or excuse me, Manhattan Life on the First Health Network, and I do the brochure and I review it. And whether it's Philadelphia American, Manhattan Life, the sooner you could master this brochure or the equivalent that Philadelphia American has, the sooner you could master those, and that's probably the hardest thing in the beginning. But once you got that mastered, you could sell anything under the sun. So I pitch this plan and I sell this plan. Now, if they ask, hey, what if I hit a threshold here, if they're really following along? Then I could bring in, well, that's why you have the out-of-pocket protection. That's why, and I'll bring one more into the mix here because of this specific example. Where is it? Here. MedMutual. Okay. So all this is, and I don't want to spend a lot of time on it and confuse you because it's really doesn't have to be confusing. All MedMutual is, and again, I don't sell this per se unless they ask specifically. I just attach it and I quote the price. But when I'm selling this, if they say, hey, what's that MedMutual thing? Well, that's in case you go over any of these thresholds that you see here. Where did I put it? This plan will blanket you with an extra $1 million for specified diseases, sicknesses, and accidents. Keep it simple, right? Now, again, there's more to that, but no reason to go into the weeds right now, just learning the basics. So, but again, all I'm selling is this plan, and I package it accordingly.